Okay, while least I'm on the I'm sharing something. Unfortunately, I won't be able to see if someone is raising their hand, or I won't be able to see if someone is saying something. So if ever you have got something that you want to say, please just interact, just unmute and then say it. Then we will listen and then continue. If ever you do not get something right, then unmute and say something, because I won't be able to see, because I've come out of the Teams platform where I can see what people are saying, or the chat. Okay. All right. Welcome to Accounts Management course, the 2023. This is our third and last intake for 2023. My name is Fortunata Serera. I am a CASA and a registered auditor. I am the one appointed to be your facilitator for the course, both on the webinars as well as attending to the forum, as well as uploading scripts and marking. So I'll be more of like doing everything, and then we'll have a moderator when it comes to marking. Okay. So that is who I am. Okay, so with this course, basically how it is structured is that it used to be an online course. It being an online course, then they've created a platform. They call it eLeader. So on that platform, what the LSA has done is that most of the information is loaded on the platform. So they've tried to load everything online, but because of change of times, what they've decided to do is that they've also decided to load in webinars to allow you guys to interact with the facilitator. So they've allowed 3 webinars in the course. So we are going to have this one, which will more of like cover assignment 1, and we'll have a webinar which will cover assignment 2. And the third one, I've also just done it for assignment 2 because assignment 2 is quite long. Okay, I've introduced myself, and the thing is that with this course, if you've got any other questions outside of the webinars, you have to utilize the online system. Hence, I was talking about the online. And if you have got any questions there, you have to go on the forum and then you type in your questions. This is for the benefit of other members and other students, other participants, so that whatever that you have typed in, then whenever I log in, I am able to answer, and they don't have to ask the same question, but they will also note the answer from there. So anyone who's got any question, different question, then they can ask, and then we are able to answer. So we are given a chance that the facilitator logs in once a week, but what I've decided to do is that because the interactions are now minimum because of the webinars that we have, I will log in now and again so that I'm able to attend. Because if I log in on a Monday, so you'd find we have got a question on a Friday, then I won't be able to see it until the next Monday. So what I do is that I spread my time and log in now and again. Okay, I want to request the person who is not muted, may you mute so that we minimize the noise for our recording. Okay, and then for any admin issues, if you've got any technical, any admin, like you are not able to log in, you are not able to submit your assignment, and anything to do with registration and payments, then you can contact Grace Mukuru. She is the one who is your administrator at LSSA pertaining to this course. So if you can contact her, then she'll be able to assist. And also, if you are not able to submit your assignment on time, then you can let her know, because from her, then she can give me instructions to say, may you attend to this one, may you mark, or if need be for her to give you a different assignment, then she gives you a different assignment, which we then mark separately, just for those who are having issues or who would have had issues before submission of assignments. Okay, I'll move on. Okay, so I want to show you the online platform I'm going to share and share. I'm going to unshare this presentation. Then I am going to take you through the online platform so that you are able to find where the calendar is, where the assignments. But from when I'm showing you, I'll be more of like showing you from my end what the platform looks like, of which I assume the platform looks the same for you guys. Okay, so I'm going to unshare this and then we go to the online platform and then I show you how it works. Okay, so this is our platform for our course. So one is supposed to log in, which I'm going to do. One is supposed to log into the platform. And once you log into the platform, then our course is called LBLS-LSS-2013-3. This is our course. So I'm going to get into our course, and then this is how it looks like. So if you can have a look at our the outlay of our course, we've got tabs which are on the left side and we've got the right side. So once you open a tab, it will open into the right side. Okay, so when you log in, you should be able to see the introduction. This is the introduction. So with the introduction, it will give you the terms and conditions associated with this course. Okay, it will give you the terms and conditions associated with this course. So you are supposed to click in and then you check the terms and conditions. And once you are happy with that, then you can continue. And what it has done is that there's a video for chapter 1 already on the introduction, just to introduce you to the course, how it distinguishes between a business, what's a practitioner, what's a firm. So you need to click on there and then it will take you through that. And then our course material, what we do is that we are relying on a manual. We are relying on a manual, and with this manual that we are relying on, it's more of like a start guide. So they call it a start guide. So it is the one that you need to download. So for you to download it, you need to come. So it's on your introduction. You scroll down and then you come where it's written course material. Then you see where it says click here to download the manual. So the moment you click there, you will be able to get our manual. And then included in the manual, so we've got the course material, we've got notes which are there, and then we've got a bit of legislation and regulations which are documented in the course. And you also need to download, you need to also download the act, the Legal Practitioners Act, and you also need to download the rules so that you can understand the rules. There are certain sections, if you can check in there, for accounting. So for accounting, yeah. So if you can have a look at our course it's basically legal bookkeeping. It's legal bookkeeping, an introduction to legal bookkeeping. So it's more of like covers everything when it comes to legal. Though the first chapters are more of like an introduction to bookkeeping so that you can then grasp the basic bookkeeping techniques. And then from there, when we move on to our next assignment, then we look at legal matters. Then we are able to apply that into various legal matters and how to create your ledgers, how to create your cash books, you see. Okay, and then also on this platform, so when you go onto the tabs on the left, the tabs on the left, you would find from here where it's written basic control principles. These are more of like aligned with our start guide. Introduction to bookkeeping, these are aligned to our start guide. So with our start guide, we've got about 13 sections. And then with each section, when you click on the left side, it will tell you all the list of the desired outcomes. So if you can read through, you'll be able to tell what are the desired outcomes. And then there'll be material like a little bit that is given on there. So it's not enough. That's why you need the manual. That's why you need the start guide for you to be able to get more information. Here on the platform, it's the material that is there is so limited and it won't take you so far. And also the videos which are there, they are also limited. They won't show you everything. So you really need to utilize the start guide. And also on this platform, we are given an activity with each section that is given. There's an activity that is there. A section with no activity, do not worry. It's just for you to have a feel of our activities and for you to be able to self-assess. So it's just an example and there's a given solution. Some of the topics you'd find the activities were a bit outdated, so they were taken off. So do not worry if there's nothing, because the guide is the one that is important, that is updated, that has got everything which is up to date. And then each section also has got a summary for that section. So it's just a brief summary. So at the end of the day, if you go through, you should get a summary of what you are expected to learn. Okay, and some sections, they have online multiple choice tests. So some of them do not have. So where you do not have, it's those quizzes that we that are documented, that you should go through the quizzes. So if there is no quiz, you should not worry. They are given for purposes of you learning more, of you practicing, of you going through bookkeeping questions and attempting to answer. So it's just for practice purposes. They do not contribute to the final mark. Okay. Okay, and then the assignments are the ones that do contribute. And then I'm going to, okay, I will show you how the manual looks like. So for now, let me just go through the platform and then I will share the manual with you so that you can have a feel after downloading it. Then you can be able to recognize it. Okay, so from there, from the introduction, then we have got announcements. So with the announcements, that's where where we announce. So from your end, the way that you see, it's a bit different from my end, because mine, I can edit and I can do a lot of things. But from your end, you should be able to see, like you were able to get this live webinar link. And also you are given a user guide on how to submit an assignment. So you need to go on announcements, and then now and again, please, you should be able to get information, and then you can click on there and you should be able to get more info on how to submit an assignment the way that we require. We use an online marking tool So with that online marking tool, it requires us to mark on a PDF document. So if you do not submit a PDF document, then we are not able to mark your assignment. Okay. All right. And then the next thing is the calendar. This is the calendar. So I think now you know that your course runs from it's running from September to November, mid-November. So you have to ignore some of these dates and then you go into September and October. So what I'm going to do for you, I'm going to show you a list of events. And then with our list of events, then we can select the date, which is September. I think we started on, okay, I will choose from the 15th. And then we are going until November, I think the 18th. Okay, so you can filter, you can more of like filter events. So when you filter event, this is more of like now our calendar. So our calendar will more of like show you what is happening. Like on the 25th, our assignment 1 already opened, our assignment opened. So you should be able to access the assignment when I show you where to access the assignment. Okay, and whenever I'm online, it's not a big deal that I'm online, like I told you. Because of these webinars, our interaction is now high. Because when I'm online with this one, I can't talk to you guys. It's only that I'm looking at the forum, checking on questions that you would have posted in, and then I answer. So what I try to do now is that I try to spread that time over a week so that I can log in and check whenever there are questions and then I answer on the forum. And then like the calendar, like today it's September 28, so it should have shown you that there's a webinar. So what you can do is that you can print the calendar. You can print it. So here you can see there's a printable version. You can print it so that you are able to pick up the dates. So the best way for you to do it, you go on your calendar and then you change to list of events. List of events will come up like this. It won't be a calendar, because if it's like a calendar showing every day, it's difficult for you to know what is where. So this one more of like summarizes, list of events, summarizes, you specify the date ranges, and then it comes out like this. Okay, and then we've got resources. On our resources, this is where you get your model answers, you get your resources, the main resources. So if you click there, it opens. From my end, it won't open because I'm a facilitator, but from your end, it will be able to show you. And also the communication, the documents, it will open there. And then the manual, also they've loaded it there. The webinars, this is where they are going to load the webinars as part of the resources. Okay, and then from there we've got our assignments tab. So our assignment tab, it will show you assignment 1, 2, 3. We've got 3 assignments, and then out of the 3 assignments, we are supposed to submit them whenever they open. So we are given an open date, and then we are given a closing date, due date. And then during this period, you can attempt as much as you want. You can upload and you can remove it online as many times as you want until you submit the final version that you would want the facilitators to see and mark. Okay, so like currently the one that is open is assignment 1, and it will close on 2 October, and we'll discuss a little bit on cash books today. Okay, so those are our assignments. And then besides the 3 assignments, we've got a test. There's a test that is uploaded. So that test, you should be able to get it on tests and quizzes. We'll come to there. So let me be a little bit faster so that we are able to come there. Okay, so this is where you get the assignments. So whenever you want to get an assignment, you click on the assignment and then you should be able to download. There is an attachment that is given there with the assignment. Okay, and then these are now our course. These are the tabs for what is in the course. So as part of your start guide, you will see there's the basic control principles. So here you are given the outcomes. You are given the introduction, just a hash, the summary. So it doesn't have a lot of information. And then introduction to bookkeeping, also a hash, not much, a video for you to watch, just something beneficial for you. Okay, and then trust and business, accounting records. So it's these are things that are more of like the same as the structure of our start guide until you get to financial reporting. That is where we end. So you get all that and then you see that in the manual. Okay, and then when it comes to our webinars, this is where they will upload the webinars, and then you should be able to access the webinar. Like this is an old one, but they will upload like today's webinar so that for those who couldn't attend, then they are able to go through. But the challenge is that sometimes you'd find they upload the webinar and now it depends with the quality. It also depends with if we do not get cut. So do not rely on you not attending these live webinars, because if you attend, you know you are covered and you can ask questions. Okay, and then the tests and quizzes. This is where you get test 1, which is crucial. Test 1 is very crucial because it will contribute to the final mark. Test 1 contributes 20% of the final mark. Test assignment 1 to 3, they contribute 80%. They are averaged and then they contribute. And then the other quizzes. So with test 1, it has got an open date as well. You can see that it's going to be open on the 3rd of October, and then it's going to be due on the 3rd of November. So you need you have a month to attempt it. It's open for an hour. So the moment you click on it and you want to work on it, it opens for an hour. You are given an hour to attempt it. If you do not finish within the hour, or if you abandon it, then the mark that we'll get is the final mark. You are not able to go back to it. Okay. And then the other tests and quizzes, like what I've said, they are for practice purposes. So you open them, you complete them, and then you submit. They're just for practice purposes, for you to be able to practice. Okay, so those are the ones that are there, the cash books, conveyancing, and then on the introduction, investments, journal. So you need to just attempt them so that you can see how far you are going. Okay, and then our grade book, the test 1 and assignment 1, 2, 3, they are linked to the grade book. So those are the ones that we are going to consider. The quizzes, we are not going to consider them for our final mark, but they are very important for practice purposes. So from our end, we are then able to compute the final grade mark from test 1, assignment 1 and 2 and 3. Okay, so that's our grade book. And then the forum, this is where we communicate. This is the forum. You can post anywhere. You can post on the general discussion forum. Like at the bottom, you can write in if you've got any queries, or on the welcome note at the bottom. You can create a topic here where it's written create a topic. You create a topic, or where it says more, you should be able to type in. So once you have typed in, it will show as unread to me. So the moment it's unread, what I'll do, I'll open it and then I'm able to read and respond to you. And I think it also applies to you guys whenever you have not read anything on the forum, you should have unread messages, even if they are between the facilitator and other participants or other students, you should be able to read. Okay, so that is our forum. This is our communication, like our chat box. Okay, this is where we chat. And statistics, we rarely use it. Site information, we rarely use it. And then tickets. Okay, with tickets also, it's another way of communication. So you can actually generate a ticket, and then with that ticket, it will send through. But you find with the ticket, it's only the facilitator and the students who see it. So we normally recommend that you use the forum so that other people can benefit. So you can open a ticket, you send your query. After you've sent your query, I'm able to see it, respond to the ticket, and then you get your response. And then certificates, they will upload the certificates here. But what they also do is that I think they email you the certificates once the course is finished. And then at the bottom, these are the webinars. They will upload the webinars for you. So you can, if ever you want to watch again, you can go back and watch the webinar. So basically, this is our online platform. This is our online platform. So that's how the course is run. So previously we didn't have webinars. We were just relying on the online platform and you would do everything from your end. But currently we at least have the webinars where we interact, where I can say something to you and you listen to that. Okay, so I'll come off, I'll unshare the online platform. I don't know if anyone has got any question before I move out of the online platform. If you've got any question, you can unmute and ask. So if there are no questions, then I can move from the online platform and then we go back to our presentation. Yeah, I assume there are no questions, so I'll move on. I'll also check our chat if ever there's anything on the chat. Okay, so I'll stop sharing. So on the chat, okay, there are no issues. Everyone is still there, so I am happy to proceed. I will share in our presentation. Go back to the presentation. Okay. With the presentation, so what I've done already, I have explained to you the calendar, where you get the calendar and the fact that I'm available once a week. But what I've done is that I've split it over the week. I'm available. I keep checking the platform. If ever you leave your message, then I'm able to answer. And then I've shown you where you get your announcements. But what we also have tried to do is that whenever we announce something, because usual things that we announce, they're critical, they're things that you should attend to for you to be able to move on with the course. So what we do is we try to also announce so that it's linked to your emails. So your emails are updated and then there's an email that comes with the announcement. So if you opted not to receive emails from the system, then it would mean you need to constantly log into the system and check if there's anything. Okay, and then I've spoken about the manual, which is our study guide, the accounts management study guide. So you also need to download that one. And I said I was going to show you how it looks like. So let me unshare and then I'll show you the study guide. Mm, I don't know if you are able to see our training guide. Let's stop sharing. I don't think I've shared it properly. I'm trying to share the training guide. I don't know what's happening with the system, but I'm trying to see if I can get the training guide. I think it's this one. Yes, this is the training guide. Okay, this is our online accounts management training guide. So if you have managed to download it, this is how it looks like. It has got 96 pages. It has got 96 pages and it has got a table of contents, and then it covers the various chapters that we have, like chapter 1, chapter 2, which are more of like also aligned to our online platform. Okay, this is how it looks like. So, and then here, this is our welcome, the word of welcome and explaining what legal bookkeeping course is. So you need to read that and the purpose of that. And then here it introduces concept. So you need to go through that. And from there, then it comes to chapter 1. And then the trust account is introduced. So you really need to go through this for you to be able to answer certain questions. Okay, so I'm going to leave the training guide, and I assume you have managed to download it. Okay, that's how it looks like. If you haven't, then you can always, like at the end of the course, you can always ask, and then I show you again where to download it. Okay, and then from there, let me share back our presentation. Okay, let's see presentation. Okay. I'm now trying to look for, I don't know what's happening with my laptop today. What is happening with webinar 1? Management, like a question. Here we go. Okay, we're back to our presentation. Okay, so I've shown you how to get the manual or the study guide, and then also I've explained that you need to download the act and the rules. So you find in the Act, there are certain sections like Section 86. Basically, Section 86, it will explain how legal practitioners are supposed to conduct themselves when it comes to bookkeeping of both the business account as well as the trust. They emphasize more on the trust because legal practitioners are supposed to keep money on behalf of other people. So it is crucial for them to be led by some rules and regulations. So you need to read that. And in our manual, what we've tried to do is that we also have tried to pull out those sections and those rules so that you can be aware of them and you can master them, and you should be able to, you know, apply them in your day-to-day life and also apply to our assignments. So you should be able to get them from there, and you need to grasp them. They are very crucial. You would find I've worked for the LPC. They apply those rules. They apply the sections of that pertain to accounting, pertaining to accounting and legal bookkeeping. They apply them for attorneys who are found wanting or who are not compliant. So if you are not compliant, they can even use those sections to refer to court for strike off or for suspension. So they are very important. So whenever you get any inspectors who are coming, these are the things that they are looking at if you are in compliance with the rules and the act. Okay, and then I've explained to you that we've got test 1. So our test 1 has got 20, it contributes 20%. So you need to attempt it, you need to answer it. It's open for a month, more than 30 days, for about 30 days, it's open. So you need to log into the system one of the days, even a weekend, and then you attempt test 1. And then if you look at test 1, it has got the same topics as assignment 1. It's only that it's multiple choice based. So it's based on theory. It has got a few calculations, and it's online. You answer it online. It's unlike assignments which you need to download, and then after downloading you go and attempt, and then after attempting, then you come and upload. So test 1 is online. Attempt it there, and then make sure that when you are logging in, it's that time where there's no load shedding. You know, you are within your hours where there's no load shedding, because if ever they happen to be load shedding, then and you do not finish your test, then it means you lose some marks for not finishing off. Okay, and then the assignments, I showed you the 3 assignments that we have: assignment 1, 2, 3. And then assignment 1, yeah, it's already open, not so difficult. It covers more of like a bit of theory and cash books. So we are looking at our first 5 topics or 6 topics that assignment 1 covers. So you need to go through them, and then you attempt your assignment 1. And also from this discussion, you are going to more of like get more of information for test 1. Okay, and then not for test 1, for assignment 1. And then for all the 3 assignments, they contribute 80%. So which means we average. We do not look at which one you performed well. We just take 1, 2, 3, we add them up, we divide by 300, and then we more of like average so that we get a mark. We add with test 1, then we get your final mark. So what you need to do is that you need to plan your time so that you make sure you submit your test, you submit your assignments. So these assignments, like assignment 1 is open for a week. So you from Monday, it was open until the next Monday. So you have a week, you've got weekends that you can sit and plan your time and attempt them. And then assignment 2 is a bit longer, and it has got difficult topics that are there. So with assignment 2, it's open for almost about 10 days or more. So it's a bit longer, so you can attempt assignment 2 over a period of time. So what you need to do is that just set up time like an hour a day where you just do part of the assignment, so that by the time you finish your 10 days, you are done. And also we are going to have 2 webinars to cover assignment 2 so that I can assist you, I can show you how it is done. Okay, and then be active on the forum. I've shown you where the forum is. If you have any questions, please just ask on the forum or prepare the questions, and then when we meet in the webinar, then we can always do after the 2 hours, we can attempt. So, and also just never give up. This is not a difficult course. This is not a very tough course. If ever you are coming with challenges, just ask so that we can help you. If ever we need to create extra time, then we create extra time. Okay, thank you. And then assignments. I've explained assignments. We've got assignment 1, covers chapters 1 to 7. Assignment 2, chapters 8 to 13. Assignment 3, it more of like covers all the chapters. It's just more of like a revision of all the chapters, set in a different tone, but it's just one of the simplest assignment. So we want you to recover from assignment 2, so we do not make assignment 3 very difficult for you. It's just a different tone. Okay. And then we go to our manual. So if you go to our manual or study guide, you would find there's an introduction to bookkeeping. Okay, so what I'm going to tell you now when it comes to the introduction, our course accounts management course, it's more of like the same as the legal bookkeeping course. It used to be called legal bookkeeping course, so they just changed. They just more of like changed the name to accounts management. I don't know why they changed it, but yeah, it's more of like bookkeeping. It covers more on legal. And I've spoken about the manual or the study guide. You should study that study guide. And it introduces us to the concepts of the trust and the business accounts. And you need to understand the difference between trust and business accounts. Okay. The reason why you need to understand is that these accounts should be kept separately. And with the legal field, it is a privileged field where there's a trust account. So with the trust account, you are given the benefits to hold money on behalf of other people. So that money is for other people. It's not for the business. So money for other people should be kept in the trust account, and that for the business should be kept in a business account, should be separated. Trust account can only go, trust monies can only be paid into the business accounts only where there is an invoice raised or where the firm is accounted to the client and the client is happy and say, okay, fine, you can transfer and take your fees. Okay. And the other privilege of the legal industry is that you can ask for your fees in advance. So before you can tackle a matter, before a legal practitioner can start working on a matter, they can say to a client, oh, okay, you have approached me. You want me to help you. So what I can ask from you is that my fees are going to be so much. It can be, say, 50,000. Then out of this 50,000, I'm asking you to put a deposit, and your deposit would be like 30,000. And I'm requesting you to put it in our trust account because we haven't started working. The money cannot be put in the business account. So you put it in the trust whenever you want to conduct or you've done work, then you can invoice, you can agree with the client, then you transfer the money from the trust account to the business account. Or say, for instance, you want to travel, you've got disbursements on behalf of the client, then you can pay the disbursements from the trust account to whoever you're paying on behalf of a client. Okay. So you need to understand the differences between the two. And then the next thing is the basic control principles. Basic control principles. So these are just to do with rules. Look at the act, look at the rules pertaining to bookkeeping, pertaining to accounting. And like I've said before, they stress on the rules. You need to understand them. Okay. And some of the rules that are crucial Just want to, okay, the crucial rules that are very important is that, like if you look at the trust account, just the fact that a trust account should be a Section 86(2) account, and the bank statement of the trust account should reference to Section 86(2). That is very important. So if you get someone coming to inspect, they also inspect the bank statements, and then they want to see that it is written Section 86(2). The reasons are that you find the fund, the Fidelity Fund, negotiate for certain packages for attorneys with the banks. And when they negotiate, then you find there are certain benefits then that come from there that benefits the industry, and that benefit the fund as well as any clients that are affected. So say, for instance, if there's misappropriation of money, the fund can reimburse a client, but they look at your bank account and say, if it was a Section 86(2), and if it has got a reference to that, when you go to the bank, you have to make sure that you give it a reference to that. Okay. And then some of the rules, like the notification of the trust account. So the moment you open a trust account, you open a firm or a practice, then you have to open a trust account. Each firm should have a trust account, at least one trust account, even if there are not transactions which are going through that account. According to the Act, an account should be opened. So whether there are transactions, no transactions, they expect an account to be opened. So where there are no transactions, it means that the practitioner pays in to cover the bank charges. They pay in to cover the bank charges, and such payments are not recoverable from the fund. Okay. And then the other accounting rules that are important, you need to distinguish between trust account and business account transactions. You should distinguish, like, there shouldn't be any business transactions in the trust account. So say, for instance, if you are transferring money, what I've seen with most attorneys, what they do is that when they are doing a trust transfer, in that trust transfer, they want to transfer money so that they can go and pay salaries. So you'd find the reference which is now sitting in the trust account, it's salary. Or if they want to buy fuel, reference is now fuel. So there shouldn't be, the trust account should relate to your clients. If you are taking fees for a particular client, so you should indicate that these are fees from a file of Peter. So it should be fees Peter. Or if you're referencing, you've got a way that you reference your files or your matters, then you indicate this is fees for matter M23. Not that you think I want to go and pay salaries, it's month end, let me transfer, and you call it salary so that you remember you're taking it for salary. No, it should relate to clients, because remember, these funds are for clients, and we should see a reconciliation of each amount which comes into the trust account. So if a particular client pays in 10,000, we want to see how that 10,000 has been spent. So it should have a reference to the client, not to anything to do with the business account. So once the money moves from trust into business, then yes, you can pay salaries, you can pay the municipality, you can pay telephones. You see, those references are for the business account and not for the trust. And then also part of the rules that are there, you need to update the accounting records. They want accounting records to be updated on a monthly basis, And you should be printing out the cash book and the ledgers and the reconciliation between the two, which shows that the accounting records, especially to do with the trust account, are constantly reconciled. You see, you can have, most people now, they are using accounting systems. So one has to print out, or you need to have a very good backup system which shows that reconciliations are being done and you are happy with the money that is in the trust account and you are able to reconcile it to the clients, to the matters. Remember, it has to do with the matters, okay? And even on the audit report, you find they also ask the auditor if the books are updated on a monthly basis. So make sure that the records are updated on a monthly basis. And also, trust money should be kept separate from any other money, which means you should be able to identify trust money. It should stay in the trust account. It should never be mixed with business money. So if ever there's money that was paid by a client into the business account and it is supposed to be trust money, then it should be transferred back to the trust account and accounted for from the trust account. It should be identifiable. You should be able to tell this is money for this client and this is how the money from the amount that was paid into zero, how it got to zero. You should be able to account for it in a ledger. So you should have ledgers for each matter, which paid into the trust account. Okay. And then you should look at other accounting requirements for trust transactions, that you should maintain your records in terms of the act and the rules and what the council requires of you. So you need to read through all that. And also where the firm receives cash, which is rare now because of the FICA, where there's cash received, you need to promptly deposit the cash, and then you need to ensure that the trust balances do not exceed trust money. So if you have your matters and you know this matter has got money in the trust account, you need to record all the matters with money in the trust account, and then you compare with money which is in the trust account. If ever there's a shortfall, then it's not allowed. It's non-compliance. It's a contravention of the act. It's a contravention of the rules, and it can lead to striking off. And if your auditors are to report you to the Law Society, an investigation is conducted to the Legal Practice Council. An investigation is conducted, and it doesn't work well for people to be having such a position. So ensure always that trust money exceeds the liabilities. Okay, so in cases where like there are bank charges and they are taking money from the trust account, the practitioner needs to ensure that they deposit money in the trust account on a regular basis to cover for the bank charges, or they can go on a sweeping system, an arrangement which was done by the fund and the banks, where the banks are taking money from the business account to cover the charges for the trust charges. Okay, and then trust accounts should never be in debit, which means you cannot pay on behalf of a client who has not put money in the trust account. So say, for instance, you have a client and then they say, can you pay the advocate for me? I'll pay you next week to cover that. You can't take trust money and pay. You have to utilize your business money, and then they become your business data, and then they pay you from the business side. In the trust account, no money, no payment on behalf of someone. Okay, and then you need to look at rules on how to transfer money from the trust account to the business account. Okay, and then deposits for future legal liability. You need to have a look at all that, and how to withdraw money from the trust account to anywhere. Like if you are to withdraw from the trust account to the business account, when can you make such a withdrawal? So you need to read the manual or our study guide for you to be able to get that information. And also payments from the trust account, they say there shouldn't be no withdrawals, no cash withdrawals from the trust account. And then they also tell you about interest accrued in the trust account, how it should be treated. Okay, so those are the rules that we have. They are in our study guide. And there's another like 1.16. It has got additional information of unallocated funds, how they should be accounted for. So you need to read all that and you need to understand. This is very important for the industry, very important. So you need to read and understand that. And then how to keep proper accounting records, you also need to read that because it comes from the Legal Practice Act and it's a requirement. So make sure you also read, you understand, and you just need to know these things. And then retention of accounting records, the period that is required. So you would find whenever there's someone who is coming to inspect the records of the firm, they will ask you records within those 7 years. So a firm needs to retain records for those 7 years. Okay. Okay, so from there for now, what I'm going to do is that it's now 5 o'clock. We can take a break. Let's take a 5 minutes break, or yeah, 5 minutes break. And then we can come back and then we cover what is left. We do our assignment, and from there I'll also answer in there's a question on the chat, and then I'll also answer. There's a question there, and then yeah, let's take it from there. 5 minutes break, and then we come back. Welcome back. I hope everyone is back now. We've managed to go to the bathrooms and to stand up and refresh. You know, 2 hours is very, very, very short when it comes to this course. It has got a lot of information, and also it's a practical subject. So here and there we need to be working on our questions and answer them, and they take a bit of some time. Okay. And then I've got a question on the chat from Shivon, which says, hello, what is the difference between the section 86.3 and the section 86.4 investment account? Okay, we haven't covered investment accounts, but I believe most of you guys are into the field, and you know we've got our trust accounts, and then besides our trust accounts, we've got investment accounts. Okay, so when it comes to a section, okay, a trust account is actually called a section 86 account, section 86.2 account, section 86.2 account. So that's our trust account. And then when it comes to section 86.3, this is more of like a call account or investment account, a short term, like one that the practitioner should be able to access immediately when funds are required. So this was more of like introduced so that firms can minimize keeping money in the trust account, a lot of money in the trust account, to avoid fraud issues. You know, people can decide to crack the trust account and withdraw money because it is a transactionary account. It is usually accessible, and fraudsters out there, they want to steal from trust accounts because they know most firms are holding a lot of money in the trust account. So the Fidelity Fund, what it has done is that then they encouraged law firms to open another savings account at their discretion. So wherever they see that funds are not required by clients immediately, it depends with the matter. So when your matter is not settling now, or you do not need to be paying anything for the matter now, and you're just sitting with funds in the trust account until you can resume or pay on behalf of the matter, then at your discretion, you can transfer those funds into a section 86.3 account. It can be a call account, it can be a savings account, but it should, when you're opening it up with the bank, it should also read section 86.3 so that the Fidelity Fund, if anything happens, then the Fidelity Fund is able to cover the clients for any mishaps. Like it should show that you had no intention of removing the funds. Okay, and then where a client is given us instructions, like in matters like conveyancing matters or road accident fund matters, where the court instructs to say, once you receive this money in the trust account, while least you are waiting for other things to happen, it can be transfer of a property. You are waiting for the process to transfer the property, or if it's third party matters from the road accident fund, you are waiting for the creation of a trust on behalf of the client. So you are instructed then to open a section 86.4. So section 86.4 comes with an instruction from the client, or you can even inform your client to instruct to say you invest money while you are waiting for the underlying transaction. So you do that in a section 86.4 account. And then what happens with the section 86.4 account is that the interest is paid, 5% of the interest is paid to the fund, 95% of the interest is payable to the client. Okay, and then when it comes to a trust account, Section 86.2 and Section 86.3, the interest that is earned in the 100% of the interest is payable to the fund. So if you are holding money in your trust account, the client cannot come back and say, give me interest. You see? So you need to inform your clients and say, if you feel you need interest out of your money, then you have to give me an instruction. They give you a formal instruction letter. You keep it in file. You open a Section 86.3.4 that is managed by the firm. Sorry for that. Okay, that is managed by the firm. And then when the matter comes to a conclusion, then the interest, 95% of that you pay it over to the fund. Okay. Okay, so you need to get instructions from your clients for you to be able to invest on behalf of the client. Otherwise, no instruction, then the funds, the interest belongs to the fund. Okay. All right, I go back to our presentation. And then from basic control principles, the next topic is introduction to bookkeeping. So with introduction to bookkeeping, it will explain what is bookkeeping and the differences between bookkeeping and accounting. Okay, so if you look at bookkeeping, it's mere recording of transactions. So you can employ someone, have an accounting system, employ someone who is recording, who is capturing your transactions into the system. So that is your bookkeeper. They are capturing the transactions. Probably they just capture. And then after that, then you look for an accountant. So bookkeepers, normally they capture up to trial balance. You are able to pull out a trial balance. And usually they are able to reconcile the various accounts such that when you come up with your trial balance, then you have to look for an accountant. Then your accountant is there to assist you to prepare reports. Okay, reports so that you can be accountable to other parties. So if you want to submit records to SARS, they want them in the form of financial statements. So you are able to now give those reports to SARS. You are able to give financial statements to the bank if you want to borrow. And then you are able to also present reports that are required by the LPC. Usually that you do it between yourselves and the auditors. So accounting, it assists you with being able to account to third parties. So it is the same information that has been captured by the bookkeeper that is now refined in a way that you can present it to third parties in a format that they require for their own interpretation and use. Okay, and the importance of bookkeeping, I think that one you'll get it in the manual. Bookkeeping is very crucial because at least after our records are captured, we can be able to tell how much money is in our trust account, in our business account, whose money is that? Are we even making a profit out of the business? So you can only be able to tell that after transactions are captured and are recorded. And also, you will be able to tell if you've got any debtors, any clients that are owing, any matters that are still owing. And in the trust account, you should be able to tell whose money is sitting in the trust account. Because when you are updating your records on a monthly basis or on a daily basis, then it means you are tracking what is happening in your firm or in your practice. Okay, and then you should be able to tell who are the debtors, the creditors, and if we are making a profit. So that is the importance of bookkeeping. because it gives us all that information. If you are making a profit, then you are able to account to SARS, because then they require their taxes to be paid. And also, like your bookkeeping, it will tell you if you have paid, say, your provisional tax, if you have paid your normal tax, and all that information. You get it after doing your bookkeeping. Okay, and then the next topic would be there's a principle called double entry. Okay, so with accounting, the way that they've devised the accounting for it to be understandable, they've come up with a double entry system. So with a double entry system, what they've done is that they've come up with an accounting equation. Okay, so what happens is that the firm should, at the end of the day, sit with assets, it should have liabilities, and the net of the two should be the owner's equity. So at the end of the day, the owner is the one who has to benefit. The owner is the one who has to benefit. Okay, so whenever we have got our income, we generate our income by working every day, attending to matters. And then there are expenses, business expenses, which we need to pay, which are like our telephones, our salaries, our fuel costs, and any other costs that we incur in the business. So at the end of the day, when we look at our income and compare it with the expenses, whatever that is left for the owner. So it's more of like what is left for the owner, and that is called profit, or it's called equity. It builds up into equity. And also, if you look at the assets of the business, you subtract the liabilities of the business. So assets, we are looking at if we've got motor vehicles, if we've got an office, if we have the law books, if we've got law books like your law library, it's an asset of the firm. And if we've got printers, we've got our furniture, so that forms part of the asset, and including the matters that are yet to pay. We've done the work, but the matter is not yet paid. The client is not yet paid. So that is part of the assets of the firm. And then when we look at liabilities, we are looking at where we have borrowed, say the business borrows from the bank, the liability, the business owes the municipality, it owes for rent. We have been utilizing offices and we haven't paid. So we are owing the landlord, that's a liability. And then we buy anything on hire purchase or on installment sale, then that's a liability. So at the end of the day, if assets are greater than liabilities, the net effect gives us also owner's equity. So the formula comes to owner's equity. So the owner's equity means that is the value of what the owner has in the business. But where liabilities exceeds assets, then we've got a problem. It means the business is not functioning well. It means the income that we are generating is lower than expenses. So at the end of the day, things are not well. Okay, so that is the principle of double entry. So with double entry, what we are saying, for each and every transactions that we have, we conduct, there's a debit and a credit entry. There's a debit and a credit entry. I will show you when we are doing the example of our cash books, how the double entry system works, than explaining it by word of mouth. So I'll come back to that one when we are doing our example. Okay, and there's what we call the accounting cycle. Okay, the accounting cycle. Let's see if I've okay here. Okay, this is what we call the accounting cycle. Okay, so with the accounting cycle, we are looking at where we start to where we end. Okay, we start from source documents. So when I'm saying source documents, when we've got a transaction is conducted through source documents. So say, for instance, if we are buying a computer, so we are getting our asset, we are presented with, so we'll be presented with an invoice. So that invoice, we call it a source document. And also when we are paying, the bank statement records that transaction, it becomes our source document. When we receive money from clients, if it's cash, and we record it on a receipt, that is our source document. So when these source documents, we need to collect them, we need to file them, we need to keep them. Those are the records that we are told we need to keep them for 7 years. And the taxman says, I think, 10 years. So we need to keep these source documents, file them. We should not buy fuel at a service station and throw away the slips. We need to keep the slips. That is an indication that a transaction occurred. Just we cannot explain things by word of mouth. You see, so we need source documents. Those are our source documents. Invoices. Whenever we want to take our fees, we invoice the client or we issue a statement of account. We file it as a way of us showing that we've got a source document so that we can prove ourselves in future to people that we are accounting to. If we are accounting to SARS, if we are accounting to court, we've got documents in place. Okay, so with our source documents, when we have them, then we capture these source documents in what we call books of prime entry. Okay, so books of prime entry, say for instance, we have our invoices for clients. Okay, so we'll go into our fee book. We are now recording the various fees that we have made. We record. And then if it's our bank statement, we more of like record in our cash book. So we go into our cash book. So for any receipts, money received, or any payments that we have made, we record in our cash book. We say we have received so much every day, every transaction that okay, we are recording it. And if we make a payment, we also record, and we distinguish, like if it's a petty cash payment, we create records for the petty cash. If it's for various bank accounts, we create for each bank account so that we are able to reconcile with the records that we are given by the various banks. Because if we lump up everything, it's difficult. It becomes so messy such that we are not able to reconcile. So those are our books of prime entry. And then from our books of prime entry, when we post from there, so our books of prime entry, they record one leg of the transaction, And then the second leg of the transaction is recorded in a ledger. Okay, in a ledger. So if we are receiving money, the first transaction is going to the cash book, which is a debit to the cash book. And then the second transaction is going to the ledger. And then the ledger, it's against the client who has paid us that money. You see, so we post into the client's ledger. So if it's a debit in the cash book, then we do a credit in the ledger. If it's a credit in the cash book, we are paying, we credit our cash book, then it's going to be a debit in the ledger. So there's that concept of double entry. Okay, and then from having our ledgers, then we prepare what we call trial balances. A trial balance is a list of our ledger accounts and our prime accounts. We do a list of the balances. So at the end of the day, if we've got a telephone ledger, we balance it off. What is the total? We take it to the trial balance. Salaries for the year, we add them up, we take it to the trial balance. It can be for the year, it can be for the month. We take it to the trial balance. So at the end of the day, if your double entry is perfectly done, your trial balance should balance. The debits and the credits should balance, and they give you a 0. Okay, and then from there, we need to then look at our trial balance. Then we can do adjustments, what we call adjustments in accounting. At this level, I don't think we'll cover, we cover any adjustments. We normally go up to trial balance level, and then we are done with our course because it's legal bookkeeping. Remember, when we do adjustments, when we do financial statements, then that becomes accounting, and it's above our level. It becomes too much for us, so we are not going to cover that for now. We will end on the trial balance. And so that's where I'm also going to end. Okay, and then I'm going to, our next topic, it covers cash books and ledgers. Okay, so with cash books, here we are talking about recording of cash. So we've got three separate cash books that we need to have. Okay, so the first one is the trust cash books. Trust cash books, this is where we record trust monies and trust payments. So if we receive money in a bank account, a trust bank account, each trust bank account should have its own trust cash book. Each trust bank account, its own trust cash book. So if we've got 3 trust bank accounts, we should also have 3 cash books. The reason is that each bank is going to issue us with its own bank statement, and then we have to reconcile it against our cash book. So a cash book is a mirror. It's more of like a mirror of a bank account at the bank. This is an internal document that we are preparing, that we are recording our transactions according to our understanding, according to things that are happening in our firm, with the chronology of them happening in our firm, the way that they are happening, not at the bank, but happening in our firm. So if Mr. Peter sends us a proof that they've paid money into a particular account, we then record in our cash book to say we have been paid. So at the end of the day, we then confirm with our bank statements to say, did that EFT come through or not? So that we can follow up with the client. And then if we have made a payment from our trust account, we also record it in our trust cash book. Say if that payment did not go through, the account where we have paid has been closed or has got issues, and then it bounces back, then we are able to then pick it up from the bank statement. Hence, we prepare bank reconciliations. Okay, so each trust account should have its own trust cash book. And then when it comes to the business accounts, it's the same. Each business account should have its own business cash book so that we record and mirror our bank, and we should be able to reconcile with the bank, particular bank. Okay, and then the petty cash book, this is for cash. So say if we withdraw money from our business account and we want to use it to pay for petty issues, like we want to buy milk, we want to pay the gardener, those things that we do not do EFTs for. We just want to go and buy or at the corner, or then we have to keep a pet cash book. So a pet cash book will show in money coming in and then what we've paid for it. And then we have to reconcile and see the opening and the closing balances at the end of each month. So that's our pet cash book. Okay, and then our ledgers, I've explained what ledgers are. So these are basically more of like recording the second entry of whatever that we would have recorded in our cash books. We record that in our ledgers. So we've got general ledgers, we've got client ledgers. Okay, so with trust accounts, we only have a trust cash book and a client ledger. So we don't have any other thing. Whatever that we are doing there, it's to receive money on behalf of clients. We are receiving money on behalf of clients. We are paying money on behalf of clients. So if we are transferring our money, our fees, we are transferring against the client's ledger. We are transferring against the client's ledger. So I will show you when we are doing our recording. That's what we are going to be doing right now, preparing our cash books. And then reconciliations. So like what I've said, reconciliations, now we go and say, okay, we have prepared our cash book. We reconcile it with the what? With the bank statement, so that we see if we are recording properly, we are balancing, and we are not recording things which are fictitious. Things should correspond with the bank. And also other reconciliations, like for our clients, we should ask for ledger, we should ask for statements where necessary, where possible. You ask for statements from clients, especially commercial clients. They would be able to give you a statement and say, these are the transactions that we have recorded between your firm and us. And then they confirm, and then you do a recon. Where you see there are differences, then you do a reconciliation, you record whatever that is missing in your ledgers, or you tell your client to say, this transaction, we have it from our end. Can you reconcile? Can you also record it? Or you give them the document and say, this is the document, record it in your books. So it just helps with the communication. You can see where there are differences, where there are anomalies because of reconciliations. And when it comes to suppliers, it's the same thing. Ask your supplier for statements, compare to what is recorded in your books. And then if there are differences, communicate with the supplier. Whoever on their side needs to record the transactions, they record, so that you come to one accord. You come to one balance. That is accounting. Okay, so our next item is that we want to record in a cash book, and we want to record in a ledger, in a trust ledger. We want to do an example of recording. Okay, so our example of recording, what I'm going to more of like do is I'll try to share in an Excel workbook where we go through the transactions and record them. Okay, so I'm going to unshare this, and then we share in the Excel workbook, and then so if you've got any questions before we can start, you can let me know, and then I can answer those questions. Okay, I'm going to unshare. And then I'm going to share in our screen. Okay. I hope you are able to see this. The screen that I'm sharing has got an Excel template on the left, and it has got a Word template on the right. So the Word template is the one that has got the question, and then the Excel is the one that we're going to work through the question. Okay, so we should be fast because we are left with about 30 minutes to do that. All right. So for now, I'm just making it small so that you can see how a cash book is structured. Okay, so this is our cash book. Okay, let me try to maximize, make it bigger. Okay, so here what I'm presenting here is what we call a T account. It's called a T account. The reason why it's a T account, so it has got the top part here, and then it has got, we separate with this line, thick line, we're separating. So on the right side, oh, sorry, on the left side is called our debit side. Okay, so when we've got a cash book, we more of like call it a receipt side. So this is where you record all the receipts, all the money that has been received in our firm, which then goes to our trust account. Money received, which goes to the trust account. So I'm going to color it. Let me color it yellow. Okay, so this is our debit side. And then this is our credit side. You color it blue. And then to make it T, you find, let's color this green. Okay, so if you look at this, this is a T. So it's called the T account. Why? Because on top is our headings, like it then describes what we are doing. And then this is the debit side, this is the credit side, receipt side, payment side. Only for cash books. Only for cash books. That's where you talk receipts and payments. But when it comes to other ledger accounts, we are talking debit or credit, so that you understand which one is debited, which one is credited. But the concept is the same with the cash book, but it's easier for you to understand that these are our receipts, these are our payments, so that whenever you see a payment, you know it will go to the right side of the cash book. Okay. And we are going to go to our question. I'll maximize it. So our first question says, 1 August 2022, we had an opening balance in our cash book of 5,000. Okay, the instruction is that record the following transactions in a trust cash book and business cash book and balance it off. So these are trust transactions. We are already given trust transactions. So we know they fall into our trust account. So we have to record, this is the opening balance. We had 5,000 in the trust account and also in our trust cash book. Okay, so we need to record it here. So it's on 1 August. So we should always have our date. That's what accounting, bookkeeping and accounting is all about. Everything should be recorded according to its date. A date is very crucial because even to SARS, to the banks, when we are reporting things, we are reporting them according to date ranges. So you are told record from this date to that date, this date to that date. So every transaction, you should record it accordingly. Okay, so our opening balance, it's a debit. So this is the yellow side is our debit side. So it's a balance, opening balance, that, and it's 5,000. Okay, so that's how we record it. So if we were to record this in a ledger, we're going to be given more information to say the 5,000 that we had in the trust account is made up of the following matters. Maybe matter 1 at 2,000, matter 2 at 200, matter 3 at 400, until when you add them up, they give you 5,000. And then when you also go to the ledgers for the matters, then you also do ledgers to show the opening balances on the ledgers. And those opening balances go to the credit side. Like what I've said before, every debit should have a credit. So this 5,000, its corresponding credit would be going to the ledgers. Okay. And then our next transaction, it's we are told that on 2 August, Mr. Govender deposited 50,000 into the account for a litigation matter. Okay, so it's 50,000 for a litigation matter. I hope you are able to see whenever I share a screen. I hope you are able to see. So we come. So it's on 2 August. Like that, it's 2 August. So here we are. It's a receipt 2022, and we are receiving from Mr. Govender. So it's for the matter of Mr. Govender. You see, if we had file references, then we also put our file reference. If it's GV1001, we say GV1001. How much are we receiving? 50,000. Okay, that's how we show how to record. So this is Mr. Govender. And then when it comes to the ledgers, I want to record the ledgers. I want to put them to create our trust ledgers. I'll create them here like that. Okay, so in our cash book, here's our cash book. We have received 50,000. So we need to record it in a ledger. Every debit should have a credit. So when we come to our ledger, here's Mr. Govender. Every debit should have a credit balance. Every debit should have a credit balance. Just like that. That is the concept. So on 2 August 2022, so it's Mr. Govender's matter. So we show where is the debit. It's in the trust bank account or trust cash book. We call it that. And how much? It's 50,000. So the reason why Mr. Govender is our trust creditor is because he has got a credit balance. So all trust matters should have credit balance. There shouldn't be any matter which should have a debit according to the rules. That's what the rules were telling us. No matter should have a debit. They should have credit balances because they are called trust creditors, or they are called meta, our meta ledgers. So it's for our matters, and it's only for matters. Whatever that goes to the trust account, it's for matters. There's nothing for the firm. There's nothing for the business, except for money that we are given to receive as our fees. Only after we take them as our fees, then it becomes a business property. It moves to the business account. Okay. And then the next transaction, we are told 4 August, SAPS paid 40,000 into the trust account on behalf of Mr. Maluleke. Okay. 4 August on behalf of Mr. Maluleke. So we come here 4 August 2022, Mr. Maluleke. Remember, it's a receipt. So we can always show the parties a matter. And then it's 40,000 like that. So we have received, we've done our debit balance. Then means we go to our ledgers as well. We create a ledger for Mr. Maluleke, and also we show the date for August 2022. And it's from our trust bank account. That's where the money is. And then it's 40,000. like that. Okay. And then our next transaction, 8 August, we paid Advocate Fantonde 10,000 on behalf of the Govender matter. So this is where we are. We are paying on behalf of the Govender matter 10,000 on 8 August. And it's an advocate that we are paying. So we go back, we record in our trust cash book, 8 August 2022, and it's our Mr. Govender matter, and we are paying advocates and 20. And how much are we paying? 10,000. Yeah, we are paying 10,000. So we go back. So it's a payment out of our trust account. We are paying on behalf of a matter. So now that we've paid on behalf of a matter, when we go to our trust ledger, we also record that transaction. So it's on 8 August. Remember, we've credited the cash book. Now we are going to debit. So that is the double entry. That's the double entry. You credit and then now you are debiting. You debit, then you credit another account. So that's the explanation of the double entry. So it's our trust bank and it's advocate Fantonte that we are paying. And how much are we paying? 10,000. So the idea of us recording, if you can have a look at this, we can now track our 50,000. 10 is gone already. You see, we are balancing, we are left with 40. You see, that's the good thing about recording transactions. All right, and then the next one, 12 August, we paid Mr. Maluleke 30,000 as a final settlement for his matter. 12 August, we paid Mr. Maluleke. 12 August 2022. So it's Mr. Maluleke. And then final settlement for his matter, how much? 30,000. Agreed with him, we pay him. And then we go to our trust ledger. This is Maluleke matter. You see, we've got 40,000, but on 12 August, we paid him. So it's our trust account. And then we are paying Mr. Maluleke. You see? And then we pay 30,000. So you can see the advocate, we are paying on behalf of this matter. We are tracking the money to say we received 50, we paid 10 on behalf of the matter. So we do not create an account for the advocate. No, we don't create an account for the advocate. Why? Because he never gave us money. But we record against a matter which gave us money. This is the matter that gave us money, we pay him. Mr. Maluleke's matter, with SAPS, we got the money and then we are paying him. We are showing, we are tracking his money. Now we are left with 10,000 in the trust account. Okay, we go on to the question. Then it says on 25 August, we transfer our fees of 15,000 from the Govender matter. So we are paying out of the trust account into our business account. How much? 15,000. So we come to our cash book. We are paying 25 August 2022 from the matter of Mr. Govender. And it's our fees, how much? 15,000. Okay. This is our trust cash book. Trust cash book. Here it's written. So from here, we have paid out our fees. Whatever that we record, a transaction that we record, we also record it onto our ledger, because we want to track the 50,000. How did it work? Where did it go to? This is how we track it. So it's Trust Bank and its fees. And fees, we know they go to the firm. You see, this is how we record. We need to be a little bit faster. And then 25 August, we paid the Sheriff Pretoria, 250 on the matter of Maluleke. Sheriff Pretoria. So we come 25 August, Maluleke matter. Maluleke matter. We are paying the Sheriff Pretoria North. You see, so it's a payment, goes on the payment side, 250 like that. And then we go to our ledger, we also record it. So this is the double entry. This is the double entry system. That's how it works. Whatever that you do the other side, you come and do it on the ledger. On the cash book to the ledger, just like that. Trust account, and we are paying the Sheriff. So we are tracking what happened to the money, how much, 250, like that. So if we can go back to our question, then we are told that then we transfer our fee on the Maluleke matter, how much, 9750, 9750. So on our cash book, we are transferring our fee on the Maluleke matter, how much, 9750. 9750 is what we're transferring. So it's fees, and then it's 9750, like that. So we go to our ledger, first ledger, we record it. Yeah, 25 August. And then this is now our fee transfer. And how much are we transferring? As you can see, we are also left with 9750. And then if you can have a look at this matter of Maluleke, this is the end of it. We received 40, and then we are accounting for it. This is what happened to his money until it got finished. Okay. So this is how we do our accounting, our bookkeeping, our recording. And then 31 August, we receive interest of 520. So in the trust account, remember, trust accounts, they receive interest. So it's 31 August now, 2022, and then there's interest in the trust account given by the bank for having money kept in the bank. It's 520. And then what we do, we record that interest. We record it in the legal practice Fidelity Fund account. So on this 31 August 2022, so it's from the Trust Bank, and its interest, how much? 520. So we have completed our double entry. And then our last transaction, we are told we paid bank charges in the amount of 324 on 31 August, 324. So we are paying. So it's 31 August. From the trust account, we are paying, and then it's bank charges like that, 324. It's a payment. And then we come to our trust ledger, 31 August 2022. It's because what happens is that the legal practice Fidelity Fund allows a practice to knock off any bank charges if interest is higher than bank charges. So at the end of the day, what is paid over to them is the net interest. So trust account, and it's bank charges. So it's trust bank account, it's bank charges like that. How much? 324, like that. So the difference between the two, which is this 196, is what would be payable over to the fund. Okay, so as it is, we are done with recording our trust transactions. This is our cash book. So we want to balance it off. We want to balance it off. So for us to balance it off, we add up like this. We add up the other side. And then we look at the side which is bigger minus the side which is smaller. So that is our balance. So the side which is smaller is the one which is being balanced off. You see, to give us a zero effect. So they are now balancing. They are now balancing. And then this balance carried forward, we are carrying it forward. So when we start in September, 1 September 2022, we have what we call balance carried down or opening balance. Call it opening balance. And this one can be called closing balance or closing balance, like that. So this is our opening balance of 3196. And then this 3196, where do we find it? So if we come to our ledgers, this is where we find it. 25,000, it's with the governor matter. 196, it is in the, it's for the legal practice. 25 for the governor matter. And then, of course, remember, we've got an opening balance of 5,000 that was there, which we had not accounted for. Remember, I told you in a real life scenario, we are given whose money is that 5,000. Then we also do the ledgers for that 5,000. So that is the difference that we are having. Okay. So this is how we record into our cash book and ledgers. And then we are also supposed to do the same for the business account. So what I'm going to do with the business account, I'm just trying to I'm going to be faster. For those who can stay in, please stay in so that I can show you how to record these 8 transactions. Then once we are done with the 8 transactions, if you've got questions, you ask me questions, then we call it, we can close off. Okay, 1 August, we have an opening balance of 3,750. So we go to our business ledger. So it's business cash book. So it's same scenario, same sides, receipt side with the yellow, and then payment side, we put it green. We put it what, blue, mid blue, and then the top side, we make it what, green, like that. So it's a T account, same concept. So if it's a receipt or our opening balance, we start with our opening balance 1 August 2022. And now for the business account, I will not show the double entry so that I can show you how to just record in a cash book, because we are going to concentrate on how to record in a cash book in our assignment. Okay, so this is our opening balance of 3,750. So this is how we record it. And then we're going to be given where the 3,750 belongs. Then we do those into the credit side of the accounts that we are told. And then we are told 2 August, we paid Telkom 750. So we come to our cash book. You see, we are paying 2 August, we are paying. And Telkom is usually our creditor. They issue us with an invoice at the end of the month, then we pay them. So this is Telkom. How much? 750. So it normally then would have an account for Telkom where we then cost against the 750. And then the next transaction is going to be 4 August. We bought stationery from CAN for 300. 4 August 2022, we bought stationery. CAN So CAN is not our creditor. So we'll post directly into the stationery account. Printing, usually we call it printing and stationery, or it can be stationery account. So we'll post there, and then we are just showing that we bought from CNA so that we can track, if we want to track our transactions. Okay. And then the next one, 25 August, we paid the secretary a salary of 6,000. So it's a payment. So when we come here, 25 August 2022, so we are paying secretary salary, how much? 6,000. Okay, so on the receipt side, remember when we were doing our trust cash book, we're transferring fees. So if we can go back, if you can check here for Mr. Govender, we transferred fees of 15,000. So this fee of 15,000, we also can record it on our, because we receive it, we also receive it on our cash book. So we record it. This is how we record it. We are receiving it in our business cash book. And then if we can go back again, and for Maluleke Meta, we also received our fee. Then we go to our business cash book, we record it like that. So this is how we record it. So that when we are paying the secretary, it's not like we are paying, we don't have money. It's because we have received our fees and we can pay the secretary. And then we go, the director himself, the practitioner also withdraws 5,000 for himself. So he's withdrawing on 25 August. So we've got drawings for the practitioner of 5,000. Okay. And then we pay rent, MST investments, 2,400. We know that we've got rental obligations, 25 August 2022. Then we pay rent account. MST investments. And how much are we paying? 2.4. So payments on the right side, on the credit side. And then we come, we purchase a computer monitor from Incredible Solutions for 799.99. On the 25 again, and then it's a computer monitor, computer equipment. So it's Incredible Solutions. So it's how much? 799.99. We are spending our money. So we record whatever that we spend on. Last one, it's bank charges. 31 August, bank charges of 180. So we come 30 August 2022, 31. And then we've got bank charges. How much? 180. So this is how we record in our cash book. Yeah, it's 180. So we have recorded in our cash book. This is how we record. So unfortunately, I have not done the double entry. I have not done the double entry, but our assignment 1 requires to just record in our cash books, just the basics for recording in our cash books. So for our trust account, this is our cash book. This is how we record in our cash book. So for anything that we pay, like our fees, they go to the business account. We also receive them in the business account. So this is how we record. And in our next webinar, then I will continue recording in the cash book and into the ledgers. So there's going to be a lot of recording that we are going to do. Don't feel like I didn't cover everything. I've shown you how the double entry works. At least now you've got an understanding when it comes to trust transactions. And then to the business transactions, we will do the complete recording. We'll do it in our next webinar. Okay. And now we are now experiencing load shedding. I'll come back and let me just have a look at your questions. And then for those who want to go, you can go. And the presentation will be posted on our site. And you should be able to access it. And what I will also do is that I will also post in this example that we have the question and the answer and the way that we have recorded, so that when you are attending to your assignment, you can be able to do that. I'll post it today since your assignment is due on Monday. Okay, the other question that I have is that on the assignment, are we supposed to balance off the cash books? Yes, you can balance off the cash books. Please balance off the cash books, but I don't think you will lose marks for not balancing them off. But if the question, I can't remember the question. Yeah, but if it says balance off, please balance them off. Yeah, you just have to balance them, but we won't give a mark for balancing. I think for the, yeah, I don't think there's a mark for that, but please balance them off for the sake of you practicing, okay? And then the other thing is when recording payment that are being paid out, should we always add? Oh, okay. So they are saying payments, are we supposed to always add? So in our cash book, the way that it is structured, it's a T account. It's a T account. So we always show it as a positive. We don't show it as a minus, minus, because the way that it is structured, we know that if something is on the right side, on the credit side, it's a payment. So we are not adding it. We know that we are recording it as a positive, but it is a payment out of the cash book. Okay, if say for instance in your answers you put a minus, definitely I will give you a mark for that, because your understanding is that we are taking out. But with the formats that we have, this one, you would find even if you leave it as a positive, it's correct. So in accounting, the way that we record, we normally record it like this as a positive, and we know at the end of the day we are subtracting because it's written, it's a payment. Okay, it's a receipt we are receiving, it's a payment we are paying. We do not have to show the minus sign. We just show that it's a payment 750, just like that. Okay, I hope I have answered your questions. Any other questions? Otherwise, we are done for the day. If you've got any other questions, please let me know before I can. Yes, Willem?
I'm sorry, is the assignment due on Monday or on the 3rd of October?
The assignment, when is the 3rd of October? Let's see.
I think it's Wednesday.
Tuesday. Let me just check on our platform.
Thank you very much. I'm not quite sure.
Let me check on our platform when the assignment is due.
Thank you very much.
Okay, yeah, it's due on the 2nd of October. So which is 2nd of October is Monday. October, okay, 2nd of October. So it's due on Monday. Monday, end of day. Monday, end of day.
Okay. Perfect. Thank you.
Okay, thank you. Any other questions? Because I've exceeded our time, you can, those who want to go can go, those with questions. But otherwise, thank you very much for attending. Attend to the to the assignment. If you've got any queries, you can post on the website tomorrow. and Saturday I'll have a look, but Sunday I might not be able to look. So tomorrow and Saturday, please post in and then I'll be able to answer you. Thank you very much for attending. See you next time.
Thank you. Thanks.
Okay, the session, can we do it again? Yes. We've got a lot of webinars coming. We've got 2 more webinars. I want to empower you a lot so that you enjoy the course. So definitely, yes. Thank you.